Hey everyone, um, straight into it this morning. No intro, no time. Uh, sorry, it's actually been a month. I just noticed the last stream was 17th of August. Had a good break. Barely picked up the computer, so obviously kept an eye on the charts, but just did that on my phone. The market, for those that are in Origin and keep track, I sort of put in there that I think we'll probably get a dip into the Fed funds rate decision. Looks like that's playing out. Actually, I last posted about it literally right before it rolled over. Just a bit of a coincidence there, but you know, we were coming into a lot of resistance. As you can see here, it's not like a super strong resistance point. There was a bit of support here, bit of a turnaround there, bit of support here. You know, not a bad level. It could have quite easily come up into the mid band of the Gaussian channel, but it didn't. It just bounced off the value area low, which is another, obviously, normally a fairly critical point where you can see turnarounds. Sorry. Came back with a little bit of flu or sinus infection or something. So apologize for the coughing in the voice. So it looks set to close somewhere around here. We'll get into the lower term timeframes in a second. So we've got about, when's the, sorry, just going to have a look for the calendar. So we got Canadian CPI. Where are we? So FOMC statement Thursday, which is my Friday morning. So we've got basically 4 days of trading before this FOMC announcement. I saw a letter which was supposedly written from the Senate members to the Fed saying they want a 0.75 basis point cut. If the Fed cuts 0.75 basis points, one, I think it would actually lead to a massive pump, but I don't see it happening. I think it would actually freak the market out a little bit if we saw that. So it could actually lead to a bigger dump. So just because it would, a cut of that size would basically suggest that things are not good in the economy, and probably worse than what a lot of people expect. We know the economy looks shithouse. Like, there's so many indicators that are flashing red at the moment, but we also know that things aren't likely to actually roll over for at least a few months. And I'm still predicting that we will see another all-time high before we actually get the big sell-off, recession, depression type thing that we're expecting. Interesting. Basically, this is predicting a 25 basis point cut. I actually think that's what they will do. But it's just a guess, really. They can come out and do anything. We just don't really want any major surprises. So yeah, 0.25% I think would lead to a decent rally. Now, before that, we've got 4 days. And if you look at what Bitcoin can do in 4 days, that's a 17% move. let's go with another one here. Sort of tail end of a move, 8%. So if we were to go 8%, you're talking about basically a retest of this wick here, down into the 53s. We are putting in lower highs the whole way down here. We've been putting in lower highs on the daily for quite a while. A 17% move, just bear with me. 17% move would see us down around 47. So that would actually be the reclaim of this wick. Now, when we got this wick, we did talk about typically Bitcoin likes to come back into these wicks before going higher. There are occasions where it doesn't. It will wait quite a while. But look, in reality, it's been quite a while. It's been over a month, about a month and a half. So this is a potential. I wouldn't like to call it at the moment, but it's a potential. And yeah, you look at this, literally we've been putting in higher highs, higher lows. Even this one here, technically on the close, was actually a lower low. Sorry, did I say higher lows? I meant lower lows. So technically that's a lower low as well. So we are definitely still in a daily downtrend. What we want to be seeing, and this could take a few months still, really, to get this market turned around. What we want to be seeing is potentially, if we do go down and retest this, obviously that'll be a pretty significant lower low. We may even wick down, potentially even into this 800 EMA, which is about 44, 43, somewhere around that. We kind of want to see just a blow off close somewhere down in this region. That would be ideal for me. Somewhat similar to what we have seen in the past. You know, something like this where we just get this blow off, freak everyone out, and then reverse. And that's what we would be doing. We would be freaking everyone out. Like there's a lot of doomsdayers out there that are saying the market's going to crash. You know, we're in a bubble. NASDAQ will crash, all that sort of stuff. So I think we want to make them think that they're right first, or the market wants to make them think that they're right, and then it'll reverse on them and just wipe everyone out to the upside. That's kind of what I'm expecting. It's just the depth of this correction I'm not certain of. It could very well be, like, there is a lot of support. There's a lot of buying volume that comes in on these dips. And it'll be a pretty significant move for us to even get down to the bottom of this again in this part of the cycle. But it's certainly something that people need to be aware of. What we could get is just a meander and effectively even a sideways move, maybe a little bit of a venture outside of this Gaussian channel, but then, and maybe even a move down into here. But then you'd be expecting after that rate decision to actually start the move up. And we may actually get, or what you're looking for is effectively a new high, and then for it to come back and put in a new higher low. So you want to see that trend reversal. If we see that, as soon as we see a proper trend reversal, and obviously this looked like a trend reversal, but getting this lower low again, you know, just sort of was continuation of that trend, really. And you got to be careful of the fake outs on Bitcoin with these trend reversals. Like shorter term time frame, yes, that's an uptrend, but overall, sort of the daily, weekly trend is still trending down. So you want to see a proper daily trend reversal on decent sort of over a decent time frame, not a quick trend reversal. Okay, if that makes sense. Let's get rid of these. So the other thing that makes me think we'll probably see more downside is your stochastic momentum is quite high at the moment. Now it's in the bullish control zone, so you got to be a little bit careful. But if we do cross over into that middle band, then chances are it's going to keep going down. Right? Same thing as it did here, same thing as it did here, which suggests we may even keep going past the Fed decision. I'm not certain as to whether that would be the case or not, but just if we were to cross between then and the low, took 10 bars. So if we do the same thing here, between the cross, where's the cross? I think the cross was actually, we'll call it there, 7 bars. So a week to 2 weeks it can take once it actually crosses to actually find its low. Let's take this one here. Not really the same scenario, but that took a month. I don't think we're in that scenario at the moment. Could be wrong, but yeah, just keep in mind that is looming. What you kind of want to see if you're a bull is stochastic momentum kind of does a bit of a fake out here, comes down, might even dip slightly below that level, and then moves back into the bullish control zone. So if you're looking for that to happen, you're actually looking for it to pretty well not go much further, maybe come into this wick here. Whoops, shouldn't have done that. And then move up. Okay. You wouldn't expect it to go much further below this wick or much further down than the bottom of this wick if you're looking for this sort of scenario. Okay. But at the moment, I think down is more likely than up. Volatility is sort of flat, but above the moving average there. So we could actually see a pretty decent move to the downside. I'll just quickly go over to the NASDAQ. I also mentioned we were coming into resistance on a lot of the general markets. NASDAQ had a massive day there. We are coming into the bullish control zone, so a little bit of a retest of the mid-band of the Gaussian channel here. Wouldn't surprise me if we had a couple of actual down days into the FOMC statement, just to, again, freak a few people out and then more to the upside. If it stays within the Gaussian channel here, up to the meeting, I'd probably be expecting it to go up after that meeting. S&P 500 coming into resistance. It's sorry. Still getting back into the time zone too. Yeah, pullbacks wouldn't surprise me here. Retest of the top band of the Gaussian channel would be good. Even back into the the 20 and the 50 on the daily. Pretty good level, but stochastic momentum suggests that it does have a little bit to go, and that would actually break us out to new all-time highs. And typically, once you hit a new all-time high, it does go on a run. And I think you will actually get positive gamma on the options market once you get into that sort of level. So, kind of potentially choppy, but overall momentum is to the upside. Okay. Equal weight has actually broken to a new all-time high. So that's actually important. It's suggesting there's a bit of depth to the market, and it's probably why the Nasdaq is struggling in comparison, just because the money's coming out of the big guys and moving more into Russell and the smaller stocks, I guess. So the Russell's going okay, a little bit of a flat day, but still got a target on here for the Russell of that 233, which will actually be a resistance, obviously, but we should get some support around this level here. If it does pull back over the next few days. So yeah, could be a bit dicey. Another failed assassination attempt on Trump, which is interesting. Shit's going to get weird over the next couple of years, I reckon. Wouldn't even surprise me if there's an internal conflict in the US around or after the election. Civil war, if Trump gets assassinated, I would almost put money on that. XLY, XLP, I mean, it got smashed at the start of the month, or it was getting smashed. But it's kind of supporting this rally. You kind of want this to break to new all-time highs as the market is breaking. Sorry, not to all-time highs. It at least needs to break this resistance here as the market's pushing up for it to be sort of in support of the rally. Banking. Ooh. Sorry. Banking is going okay, suggesting there's no real fear of a major issue in the market, financial markets anyway. ITB is going okay. So the home construction ETF, again, this is going up. It's suggesting that, real estate there's still money in real estate. So, or at least home building. So the market looks like it doesn't think the economy is in that bad a condition. So a rate cut of 0.25 would just kind of support that. And is likely to push us up. Don't listen to the people that just talk about rate cuts don't mean anything, and or the ones that say that rate cuts mean the economy's up the shit. It's not necessarily correlated that way. It kind of does, but the markets react not to the economy. The markets react to the future. And one thing we do still have is, okay, interesting, SKU's jumping still, so that's good. VIX is pushing up. So we're still putting in sort of higher lows on the VIX, which is interesting. Kind of need to come back down below this level. Where was I going? Sorry. Fuck it. I'll finish that thought later. Um, put it in the chat if you want to, if you want me to finish that thought. But copper, actually, years 2-year, 10-year. So we have uninverted. Obviously, we were expecting this. Also, don't think it'll mean a crash immediately, but we are now in the region where we need to be looking for black swans. We need to be looking for major reversals, potentially even that final run up. So that is kind of what you're looking for. Just go back into the last time it did that. You know, last time it did that, the S&P 500 went on pretty decent run. Let's just have a look at the percentage on that, roughly. We still saw another 34%. Is that the S&P 500? I think I got the wrong one. Hang on. Yeah, it was. Another 34%, roughly, after it uninverted before the crash. That was the COVID crash, anyway. Another time that it's done that. Let's have a quick look. Go back to the 2008, which is what everyone tends to refer to. It actually did it a number of times. But first broke it. First did it in sort of 06. But this was sort of the main uninversion here. We'll go 07. Go the 07 uninversion. And we'll see what it did. So it reinverted as well. Something to keep in mind, but you're talking, it peaked at about another 13% or so, maybe 13 to 15% before the market really started to drop in October of 07. So what's that? That's over half a year. So yeah, don't expect the end of the market just quite yet, I wouldn't think. So the other thing too is copper seems to be supporting the market rally at the moment. So when copper's running at the same time, the market's normally happy. Gold has broken out. That's fantastic. Look, where this will stop, who knows? We can put a fib on it probably. Where would we even do that fib from? Actually, no. I'd even... It's just a decent place for it to stop, I reckon, would probably be around the 28.70. So let's put that there. Let's put that there. Call that resistance. See how that plays out, but that would not surprise me at all. I think there will be some rotation in the next leg up, given that we've got uninversion of the yield curves. You got gold going on a run. We've probably got the stock market going to break up, and it'll probably go on a pretty decent blow off, I would say. Decent blow off top. If we see gold running at the same time, you know you're in sort of late cycle, and I would suggest that it will be sort of the last run. It's just how long that run lasts for. So DAX is looking strong still. Chinese market looks like it's finding a base as well. Chinese C at 50 is struggling. You'd expect it to find a base somewhere around here though. UK 100 is going okay. Kind of stuck in a range here on both the UK and the DAX. Made it back into this range pretty quickly though. Looks like we have broken that downward trend line as well. So this is a pretty good second break of this. Typically that will lead to good things, but you know, I have to wait and see. I wouldn't expect anything to come below this bottom trend line here if it was going to keep going though. Japanese market, kind of, nah. TLT is still going strong, broken out above this. So TLT will probably go on a decent run here. You'd maybe expect a little bit of pullback. I guess if TLT did this up into that 800, comes back into this level and then goes again, that'd be fantastically bullish on TLT. Like you'd have to think that that would be a run of probably work already. You'd expect at least a 122 back up into this resistance here. That's where I would be looking for if we saw this. So short term 107.5-ish or 107-ish. And then probably a pullback into that roughly around 100 again. And then if we see a run from there, and this will take time. TLT is not necessarily a fast mover. But you know, if we're doing that, yeah, it would kind of align with pauses in interest rate cuts and things like that for it to make its way back down and interest rates to go back up, and or expectations of rates like the 2-year and 10-year and stuff may actually, they're not just going to keep free falling, they will have bounces as well. So that would make a lot of sense, because yeah, that's an unsustainable kind of move. But we have broken this level here as well, so could be some more to come on the 2-year, back into that 2.8 maybe. We've got a range here that's pretty well defined. Let's call it there. We'll even just be conservative. Go to there. Even 2.6 isn't out of the question here. And that proofs out reasonably well with, you know, a bit of support around this level, but you're going to have bounces along the way, I would think. There's a fair bit of, like, that's a good level in there at around the 3% mark. So you'd be expecting the 2-year to be doing, in general terms, something like this. over the next while, and that could easily put you into middle half of next year before we get to these levels. So I don't think the cuts are going to be super quick because they're going to be scared of reinflation again, like in the 70s. If they cut too quick, you want to support the economy, not over support it. Dixie, I mean, if we break this level, you're into the 99 mark, low 99s, and then it's probably going to be a decent run to the downside from there. It's a pretty big channel it's been in. Again, if we kind of proof this out on a conservative way, pick it up. Why can't I pick that? Conservatively down into the 96, which is a fairly big volume zone here. So that's sort of a long-term target there, somewhere around there. But yeah, not looking strong. Might get a little bounce if the stock market corrects a little bit, but at the moment, stochastic momentum's downside. Volatility is actually starting to pick up. So this could actually see a pretty big move pretty quickly too. Which makes me worried they may cut more than the 0.25. If the market likes the cut, it may actually move up. Probably a retest around that. Somewhere around the 102 to 103. Euro's strong. Momentum's up, and we've got volatility increasing, so that's suggesting more upside to come. So at the moment, it looks like the Dixie will drop, but markets can turn on you pretty quick. Oil found a good base here. May get some resistance between about 71.7 and 73. But I would expect oil over the next year really to slowly start to make its way back up, and I want to see a peak on oil. So for oh man, why is that? US oil, let's do this. So if we go back to, let's go to the weekly, make it a bit better. See how oil tends to peak just before or during, certainly on a run up during a peaking market. We don't have that at the moment. Even, where's the 90? Yeah, so even in 2000, so oil was on a decent run up while the market was peaking as well. So I want to see a decent move on oil, potentially even breaking to all-time highs before we get a decent crash. So again, that's just another bit of evidence that suggests we haven't seen the top yet in the markets. Even though the economy's up the shit and everyone's doomsdaying, we haven't necessarily seen the top. So I guess I might leave it there. The Mag 7's still going strong as well. But realistically, BTC is probably going to see a little bit more downside. Just over the next few days, and then probably a run up. If it's flat over the next couple of days, if we don't get a big drop, it makes it a little bit more interesting going into the meeting. I'd actually rather see the drop before the meeting, like a decent drop before the meeting, because that'll be the excuse that it needs to actually pump. So yeah, I think over the next few days is probably going to be your last chance to buy Bitcoin at a decent level. All right. Just quickly, liquidation heat maps. Still got some liquidity down low 57 here, which I think it'll probably head towards. The other one is this one. So just looking at this, again, high 56, low 57. There's a lot of liquidity in there for it to take. But just keep in mind, we do have some pretty, like there's more orders in the order book to the downside than there is to the upside at the moment. More of those big orders. And that 43 level is a level that's potentially a target. Yeah. All right, that'll do. I'll